Eric Muathe, Muathe.com, April 22nd, 2016. Based on the list that you sent me to see whether we could find some ideas. So here's the list. Just want to do a quick review and a summary. So here's the list. It's about 47 stocks. And what I did was, because it's a long and lengthy list, the best thing to do was to go ahead and categorize them in terms of sectors. And right now, the only sector that is breaking out, in my opinion, is the metals and the mining sector. So I took a look at the other stocks, or the sectors related to the other stocks. For example, the healthcare, technology, the biotech, consumer-related cyclicals, home construction, and also there was one here on business services. So what I can encourage you to do pretty much is go with the sectors that are breaking out. And by breaking out, I mean sectors that are moving their monthly RSIs and MACDs to 3-year highs. For example, you can see the sector that obviously that we should be paying more attention to is the metals, because they are the leadership in the current market over the last couple of weeks. Because if we take a look, for example, at the GLD, so we can see here on the monthly over the last couple of weeks. In fact, let me adjust this to 34 months view instead of 36 months. I'm just gonna go to 34 months, and here the sector has been acting well over the last couple of weeks, ever since the RSIs on the monthly and also the MACDs moved to 3-year highs. So once we had that movement in the MACDs and the RSIs here at the beginning, let's call it about February, and also here, so once we hit those two minimum requirements, the sector was in play, has been in place since then. Right now, the key here is whether the GLD can hold above January's monthly closing high. I think that was February's monthly closing high at 118.64. So as long as it's holding above 118.64, we can continue hunting for ideas in the sector. Of course, if something happens here and it cracks down below 118.64, we should not be looking at the ideas from the list. And let's take a look at the GDX. And again, this has been leadership in the market. This is an amazing move here from 13 to about 24 in about 3-4 months. And again, we can look at this and see that the reason why it's been on fire is the same reason why we should always pay attention to sectors that are breaking out to 3-year highs. We can see that the instrument, or the GDX, moved above to 3-year highs on its RSI here in February, here in the MACDs, and here in the MACDs. So that met the minimum requirement, and of course since then it has been leadership in the market. So right now we continue watching this, since it continues to break out and is still positive here. The key here is whether the RSI in the here and now, as long as the RSI on the weekly is holding above 69.1, then we know that this is momentum and it could continue pushing higher. So we have an excuse to continue watching the sector. Now, the one thing I'd like to point out here is, in a timing basis, this was where we had to go long. On hindsight, this breakout here that we were watching at 20.61, once it moved above that, that was a fresh breakout. We were sensitive to that idea, and that's why we've still been watching this sector and playing that sector, because of that breakout. Now, in the here and now, you'll notice that I've been talking about, we are looking at potential here for negative divergence, higher highs in price, lower technicals for the GDX. So maybe around here we should, take the foot off the pedal here a little bit and wait for these things to, decide which way they want to go. Here we can see that we've been making this line of resistance on the GLD. In fact, I sent you a couple of charts this week suggesting that the GLD is probably coming to an area where it is stalling based on the top side of its hourly RSI. So lots of short-term resistance levels on the GLD, and I think even though they're leadership right here, maybe we should watch out and see whether the GLD can actually continue moving higher again. The key in this leadership sector is whether it can break out on the monthly. Right now it is trading at 118.6484, while it needs to be above 118.64. So it's about 20 cents above that. It needs to stay above that for us to have an interest in the area. And the other problem here is short term, we've been failing to hold above the recent weekly high. So really, the best way to play this is wait for a breakout above the recent weekly closing high. So here at 120.54, right there, would be what I would be watching for. So even though the list is lengthy, and yes, there's a lot of ideas from that space, so lots of ideas in the mining space, all these stocks come from the same mining sector. The problem here is, I think, to play it correctly, instead of owning the stocks, let's pay more attention to the sector. And the sector here does need to prove itself because of some of the resistance levels we see. And the way I would play this is to wait for the sector confirmation of strength, which is the GLD moving above 120.54, which happens to be this weekly closing high early on in the year. If it cannot break out for now, I remain a little bit suspect. And keep in mind that right now, I think also what is taking place, if you take a look at the daily for the GLD, is I think the more it struggles to hold, let me show you a level here. So there's a level somewhere around here. Let's do it during this break right there. That break comes from the RSI break here. Short term, there was a break right there. And of course, the market did move lower. So a red line here, I think, is what the market is responding to. You can see that once we moved below the red line there, in March, the market has not been back to those levels. We've hit this once before for the highs there. We hit it again over the last couple of weeks, in fact, couple of days, in fact, twice. That's a short-term double top, which gives us these highs here. I think the more we show resistance on the red line, and the threat of breaking below 50 might suggest a big down day somewhere around the corner. And keep in mind that that drop would become more significant if we break this trend line. Why? Because this trend line here connects to a 52-week low. So these are 52-week lows on the price. So any trend line that connects to that RSI level would be a serious material breach. So I would watch that, because you don't want to go in there, especially the stocks that you did send me to take a look at. Most of them are extended, and we don't want to buy extended stocks. We want to wait for sector confirmation before we can go hunting for individual ideas. So that would be my little bit of a concern here, is that maybe gold around here seems to be showing signs of potentially struggling. And so let's go back to the list here. So what I would do is, again, I took a look at the list, and the sector that is of most interest is the sector that is breaking out. Unfortunately, the sector has had a nice run. The other sectors have lots of problems. For example, let's take a look at the stocks in the technology space here, the Nasdaq related names. And if you take a look at the Nasdaq on the weekly, I would be a little bit skeptical in the current market going long the Nasdaq, because it is coming back and showing resistance as we've been discussing. So this line here right now coming into play, showing resistance. So the Nasdaq, to me, until it can clear this line, I would not be looking for names in the technology space. So rather than going to own individual names, what I'm trying to say here is we need to make sure that the sector itself or the related indices are breaking out before we can really start being aggressive in this area. So the Nasdaq remains suspect in my opinion. Until it can clear these two lines, I'm going to ignore all the stocks in that sector. And also there was some biotech names on your list here, biotech names. Just want to show you that if I take a look at the IBB, looking for an encouragement as to why I would buy the IBB. Number one, I see that this is the end of the week. It's a Friday. It's coming back, closing next to the 50 level where it has been stalling. So this 50 RSI level has been a problem since the highs here. And now we are coming back to challenge that line. If we cannot hold above the 50 in the coming week and weeks, that would be a sell point. Take a look also at the daily to be consistent with the market here. I think what's going on is it is coming back to test this top side resistance line. And also you can see that there was a resistance off the highs here, this break brought the market off the highs there, and that red line is also being challenged right now. So in my opinion, even the biotech space can be ignored because it's coming back to test recent highs on the RSI, and as you can see here, uniform activity rejection, and now with the market turning down for the day, also this is uniform activity rejection. And just to show you what the market is doing here, the market just now slipped lower. Take a look at the Nasdaq, down about 1%. So because the market is giving us a lot of sell signals, in fact, let me show you why I'm not looking to buy anything in the current market, because of the S&P 500 daily. So generally, SPX is a little bit of a concern here based on yesterday's video to subscribers. Here we are making higher highs on the SPX, lower lows on the RSI, which asks a question as to whether the market is really even strong to be buying general ideas. So because generally speaking, I am leaning to the market stalling, I would be very skeptical here to be looking for buy ideas. Probably be a little bit more patient. There's also a mention of on your list here of some home care or home construction related names. And the reason why I'm also not very interested in the area for right now is because as of this current market, we are failing to hold above this breakout level on the IYR. So the IYR failing to hold the previous closing high going back to January 2015. This failed breakout gives me pause not to want to own this area. And also keep in mind that we made a higher high in price on a monthly closing basis as of last month, but the RSI did make a lower low. That negative divergence again is a question as to whether we should even be looking in that sector, because we don't want to buy sectors that are giving us sell signals. So based on the list of stocks that you gave me here, the problem is timeliness in terms of the metals. For sure, that's the issue there, the timeliness. And this is the sector we want to watch. The other sectors, in my opinion, lots of questions as to whether the market can even hold current levels. So because I lean right now towards a market that could stall, all these sectors, if you take a look at them individually or the market generally, all these sectors are giving us a huge question as to whether we should be playing the upside. The only sector that is breaking out is the mining sector. But even the mining sector, unless and until we see that it is still acting well, and the key here is a GLD. GLD needs to break out to really confirm strength. GLD needs to break out above the recent weekly closing high of 120.54. So without that breakout above 120.54, because most of the stocks are extended, we have to be careful here to be playing this movement in the miners. So they are the strongest sector. We always want to own the strongest sector. And what I can do here is, if you take a look at the list, let's take a look at the list here quickly, and you'll notice that even on the first page of this list, for example, the first on the list here, alphabetically here, it broke out weeks ago, which was during this breakout. So on a timely basis, we can see that we missed the breakout here at 38. I did send an alert to subscribers. We are watching this one for a breakout. It's done well, but now the timing is off, because as you can see, it broke out 3 weeks ago after about 2 weeks of rest. So the timing is an issue for most of these instruments. They've had a nice run. We don't want to chase them. Take a look at AG here. You know, if you take the lows here from 250 now at above 10, the recent breakout was here. We missed that breakout in terms of hindsight now. And so why would you want to chase this? You want to wait for confirmation, either for the GLD to break out or to stall before we can buy again. And the key here is, right now we have to wait. For example, for this instrument, you have to wait at least 2 weeks of rest before any future breakout after recording a weekly closing high. So, and of course we know that in terms of timing. So all of these have already moved, and I don't want us to be chasing the sector. We want to wait for some type of a stability here, some base. AUI was one of the ones we were watching here. The breakout was just below 330. The stock has had a nice run over the last couple of weeks. Of course, after 3 weeks of a breakout back to back to back, we don't want to be buying here. We want to wait for a pullback. So even though the sector is leadership, and yes, that's where we should be paying more attention, the key here is that we have to be sensitive to the timing. And the timing is that we should be at least insisting that the GLD breakout before we go looking for some ideas to own. Now, one of the ideas that out of your list that looks to be more timely is SLW, which is a silver ETF or silver name, not ETF, but a silver stock. Here, it is week number 1 of a breakout. The breakout was at about, it's called about 1780. I'm approximating here because I don't have the precise number, but about 1880, which was this weekly closing high. The stock is above that. Problem is, you always want to buy within a 5% window of your ideal buy point, which is here. So it's a little bit extended, above 5% from 17.80. So even here we see an extension of this move. You'd want to own it as close to the breakout level of 17.80 as possible. Otherwise, most of the stocks on the list already moved and broke out weeks ago. So we have to wait for a fresh base before we can go long. So again, out of the list of stocks you sent me, I can only conclude that it's a great list, by the way. Kudos on the list. The list is supreme. I love the list. You're looking at stocks that have strong momentum, which is what we want. You can't go wrong as long as you are fishing in the right pond. As I sent you that email, the momentum names that you have on the list, even if you are to make a mistake, at least you are in the right sector. You're looking for momentum names, and I would encourage you to continue doing that. Once you find those names, it comes back now to timing. So timing becomes an issue, and of course we have to make sure that we are buying stocks that are breaking out with a fresh move, either above monthly buy points or weekly buy points. And of course, on the weekly buy points, we want to wait for at least 2 weeks of rest. And on the monthly, we want to wait for at least 1 month of rest. Also, we want to get these stocks within 5% of our buy points. So pretty much based on all that, based on leadership stocks, timing and all that, we have to be a little bit careful here not to buy gold and miners and the silver related stocks until we see the GLD break out above 120.54. Otherwise, if the GLD moves back below 118.64, I would not want to own the sector. Wait for them to form new bases until they break out again. Let's be careful. So leadership stocks first, leadership sectors first, then stocks later. Of course, that's the key. And again, I just want to remind you why, because 85% of any stocks move is going to be based on the sector. So you want to insist that always you want to own sectors that are leading the market, especially sectors that are showing the ultimate Muathe breakout with their RSIs on the monthly and the MACDs on the monthly moving to 3-year highs. If you can find sectors that are moving to 3-year highs on their monthly RSI and MACDs, then once you find the sectors, then you can go drill down and find the best stocks within the sector. Eric Muathe, Muathe.com, as always. So from your list, timeliness is an issue, so I would not be looking to buy. I want to wait for that gold confirmation with a breakout on the weekly, either a breakout above 120.654 or a failure by the GLD moving below 118.64 on its monthly. So anything that keeps so let's just conclude this video here. We need the GLD to continue holding above 118.64. That would be strong indication of bullish action. Otherwise, failure to hold above that and a move back below 118.64. Any movement below 118.64 would be a bad sign. Above it, good. Below it, bearish. Eric Muathe, Muathe.com. Keep you posted. Good luck, peace, and blessings. I am out. Woo! E-C-S.